Welcome to Power Charting. I am your host, Bruce Fraser. Can Bollinger Bands assist in the search for Wyckoff accumulation? That is the topic for today. Wyckoff meets Bollinger. And our special guest host is Johni Scan, John Colucci. Welcome, John.
Great to be here, Professor. Very excited.
So let's get started.
We have a big event coming up. Can you tell the folks at home about that, Professor?
Absolutely. Now, this show will air on Friday, September 16th. Saturday, September 17th is the big TSAA annual fall conference. This is a hybrid event, which means that you can be there in person or you can watch it virtually streaming, or for those of you that watch the show after the event, you can become a member of the TSAA and watch the recording, stream the recording. So that's lots of choices here about how to approach this conference. The cool part is become a member of the TSAA and you will have access not only to the fall conference, but to all the great events that occur through the course of the year. And so we just had a great informal workshop this last weekend. We heard lots of great comments and content about the market. Very interesting. So check it out, tsaasf.org. Any other thoughts, John?
$75 to join, best value around. You get access to so many great materials and events during the year. Really, really great organization and tremendous value.
And you get access to the International Federation of Technical Analysts, which is a international society of many of the technical analysis country societies and all the great content that comes from IFTA also. So keep that in mind. And with that, we hope to see you at the conference.
Awesome. So our first topic for today is the market itself using Bollinger Bands as part of the analytical framework. These are almost end of day, 351. I think things have gone down perhaps even slightly more than this, but what are your thoughts on the marketplace here, Professor?
Well, because we are recording this early in the week, because of the fall conference, this is being recorded at the end of the trading day, Tuesday, when we had a substantial decline in the market, pretty ugly day. In the Dow Jones Industrials, you can see here, we're down almost, well, at one point over 1,300 points based on disappointing consumer price index data that came out before the open this morning. So you can see a gap, large drop today and back down to the lows of September, which occurred in the first week or so. And we had talked at the time, and keep this in mind, that we have a couple of big things going on. One is end of the quarter, end of the third quarter. We are in the throes of that window right now, mid-September, and we have the final Fed meeting, September, I think 20th and 21st, right at the end of the quarter, which is going to have to address the issue of the CPI data. And this is the last Fed meeting before the big midterm election in November.
Playing from the side desk, I 5 DDR4.
Absolutely.
Your thoughts?
Well, one of the things that I look at when I look at the market for the possibility of developing a scan is what's occurring and how can I express that in a scan. And here we have the move down, a touch of the lower Bollinger Band, and then a move back up and off. Today, of course, is going to function as perhaps a test or hopefully not go too much lower, but there is expectation we're going to test the June lows. So when I look at this from a scanning perspective, I start to inventory what things can I use at a high degree of reliability to find interesting price formations. So here, of course, things have changed a little bit since the scan was written and deployed yesterday. It's a much different place today, but nonetheless, we'll take a look at that a little later. We see the same type of action on the Qs. The Qs were down over 5%. That's a pretty big day. And we're going down to test what might be a last point of support. Alternatively, we may have just experienced a last point of supply. Two different events, dramatically different analytical consequences. What are your thoughts here, Professor?
Well, we are in a range-bound condition since May. So we made an important low in May, had an automatic rally, range-bound condition. We were basically trading around that condition. Now, you can see that in the Bollinger Band and the way the Bollinger Band is really going sideways, really since May. And so we are faced with the potential, and we've talked about this in prior episodes, of the market being able to go down to and through the June lows, especially into the end of the third quarter. And so we have to be concerned about institutions raising cash away from stocks that they don't want to own, redeploying their assets, and becoming potentially more defensive. Doesn't mean the trading range is over, but it's still a little premature. And we've said this in the past about getting ahead of this market until we get through the end of the quarter and all the craziness that can come and the volatility. But that also is a reason to look at individual stocks and see which ones are acting maybe better than the market as a whole. So, John, carry on.
You mentioned the end of the quarter. How significant is that for analytical purposes?
Oh, very important. Think about institutional money. Institutional money really functions on a quarterly basis. They're evaluated quarter to quarter. They're evaluated against the S&P, other benchmarks, and they are making decisions, especially at the end of the quarter, that has been called window dressing. And window dressing is something that they deal with. You can see a very sharp decline in June with gaps in it, which has a climactic quality into the middle of June, which shows how volatility can come in. This occurs into the end of the quarter. The decline in the market started at the end of March, end of the first quarter, went all the way through the middle of the last month of the second quarter, and then the trading range asserted itself. A trading range could be actually bullish for the market in the future, but at this point we have to really wait to see whether or not these institutions are going to be doing more work in their portfolios and readjustments before September is over.
They're living by the quarter.
Living by the quarter. That's what they do.
So here we have the SPY, similarly big drop, not quite the Qs, but 4.31 at the time this chart was captured, down just about the same going into the close. Big drop. Yeah.
I was going to say, John, note the May lows and how the market is pulled back in September into the area of the May lows. We could call that preliminary support potentially, an automatic or a sign of strength rally into the peak in August. And now we have a pullback back down to the area of the May low. That very well could create some symmetry in some kind of a basing action. But what happened today has to be the test of the early September low and needs to stabilize around this price zone here in the next few days, and then potentially even find a way to start to work its way back up in the next week or two. Now, that may not happen. It may just keep melting down right to the June lows. But this could be a test of sorts but it needs to be successful, and it needs to be successful against these early September lows in my consideration.
Well, I think it is testing. It's certainly testing my emotional resolve. You have,
All of us.
yeah, you know, in late June, July, we had the breakout and move up. And at that point, people are probably feeling like, wow, the train's leaving the station. I've been on it. You get on it in early August, and then you get slammed to the mat into September. And then finally, the last 4 or 5 days, you start feeling like, well, maybe things are okay, and it'll move back up, and boom, hit right in the jaw again. Very, very tough set of circumstances, but this could be related to the nature of the primary trend. What are your thoughts there?
Well, the primary trend is down, in my estimation, from the beginning of the year. And so markets are below their long-term moving averages. And this is something to be respected in the way the markets are behaving. We really are not going to be out of the woods. We can't really even say that this is accumulation until we get a rally that takes out the August highs and shows the ability to rally and then pause without big corrections. Notice these corrections all are pretty deep. So a character change in the market would be a rally and a pause. Volume dries up, it gets dull and quiet, and then rallies again. We're not seeing that behavior really yet. And we need to see that to suggest that stocks are in strong hands.
We see a similar picture on the Russell. Perhaps a little bit more sedate there, but still big move down today. Once again, tough circumstances. That leads us to a question.
Mm-hmm.
Can we get information about the market from Bollinger Bands, some analysis of price wave, not Elliott wave, but just price wave, and look at that through the Wyckoff looking glass? What are your thoughts there, Professor?
I think I love to use Bollinger Bands. I'm so excited we're going to see John on Saturday and that he's going to present. The Bollinger Bands are such a useful tool, and we're going to see here how we can use Bollinger Bands in the context of the market that we're in now. And John has created a very interesting scan for us, very straightforward, simple, but powerful. John, show us what you have.
Right, and I want the folks at home to know I will be at the conference, but you are not referring to me in terms of the John at the conference. That's John Bollinger. So all of you keep in mind, it's a live presentation by the master himself, John Bollinger. That's going to be very exciting.
We'll call you Johni Scan.
All righty, I'll go with that. So we have a very simple scan that looks at the interaction of price with the lower band and how it got there. We're going to rank by the difference between the current close and the lower band. This was an intraday scan run just shy of 2 o'clock today, so a little bit out of date, but let's take a look at what we have for the syntax. Our first line of syntax after our universe, which are series of indices, we have min 10 low is lower than the lower Bollinger Band using the traditional settings of 2 and 20. There we have a 10-period examination of the low, and that low can occur anytime during that 10 period, and it's going to be has to be lower than the lower Bollinger Band. It most often will go down and pop back up. That's what we'd be looking for. It can be any point during that 10 period look back. The idea on the ROC 20 being below zero is that we look at a wave of price action. ROC being rate of change being our proxy for a down move. ROC 20 brings us down. ROC 3 brings us back up. So we have a longer term down move punctuated by a shorter term up move. has to go below the lower band at some point during the last 10 periods. And we're going to classify or rank these by their current difference between the close and the lower Bollinger Band. Because we're doing a normal standard sort, we're going to see the stocks that have moved the furthest from that lower band first, indicating that we have upward momentum after a lower band tag. So those are our syntax elements, and let's see what we get when we run that scan. 160 results. We do give the sort that we wanted. So these are largest first, 18 from the lower band all the way down to 12.8. And of course, further down will be smaller numbers. Light and Wonder Gambling, not familiar with that stock, but we have a couple of discretionaries up the top, quite a bit of healthcare, tech, another discretionary. Good variety of stocks showing up for us here. Should we take a look at some charts, Professor?
My favorite thing to do.
All righty. And there's 500 potentials, but only 160 came up. Actually, there's more than 500. So we trimmed it down considerably. Let's take a look at what we have. Here's the move down to the band. That's our ROC 20 negative. Here is our band tag within the last 10 periods and a strong move up off of that lower band. That's kind of an interesting change of character within that structure, although today, of course, has a couple difficulties. Your thoughts, Professor?
Potentially building a big cause. You can see that May low. This is a stock that caught my attention a few weeks ago. I have not traded it yet, but the key is here, we still have a range bound condition because of the extent of the decline from August to September. Now, the rally up is encouraging, and you can see that it's pulled back some, so far about a third of the advance it had in September. We'll have to watch it closely. Again, we're looking for a change of character in the way that the stock trades. We don't have that yet, but one to stalk, one to watch.
Let's put some Wyckoff marks on that. Here we have the upper and lower bandwidth. You can see that bandwidth has expanded with the increasing volatility, and our band tag was here, and that corresponds potentially to a last point of support Wyckoff elements. The box represents the start and the top and bottom of that particular structure. Do the marks add any information that's valuable to you, Professor?
Well, absolutely, because I love to draw support underneath the selling climax, if that in fact is one. It looks like one. Good rally off that low gives us support and resistance. And so we're watching again a range bound market and looking for the characteristics of a change of behavior. And so far, I would describe this for those that are really do a lot of Wyckoff work as a phase B environment so far. So more trading range to go.
Give and take, very quick and often severe. That's phase B for sure.
Yeah.
Carnival Cruise. Boy, the Carnivals, the Royal Caribbean's very, very tough environment to run a cruise business, but look at how the relative strength is trying to make a little run. We're up on the MACD, and even the OBV is starting to stabilize. Your thoughts here, Professor?
Yeah, I really like this as part of that consumer discretionary and recreational services. And you can see the volatility coming out of Carnival. Royal also, do look at the Royal Caribbean chart, because you can see the Bollinger Band really narrowing, which could be a sign of absorption. Now, it needs to get up and out of this trading range structure, but the narrowing of the band can be a sign that the stock is changing hands from weak holders to strong. So That's a very interesting chart. And I think Royal Caribbean is a little stronger than this.
Very interesting. Here are a couple marks highlighting some of the interesting features. The MACD up. We're starting to get stabilized on relative strength, as well as the OBV. And we have a nice structure in here with basically rising bottoms, a little bit of a coil here, apex forming, but somewhat encouraging after a very, very long and painful drop. So hopefully that'll work out for the folks in that stock. Here's another one. Look at the expansion of the bands here. What a jump in early August. And that move is being digested off of potentially climactic run through the upper band. That type of move often has to be digested. Your thoughts here, Professor?
Yeah, so note the Bollinger Band really constricting and becoming narrow there at the end of July. And so there, in fact, was an absorption characteristic, had one last pullback, which lasted a week and a half, but it didn't go down a whole lot. And then the resolution into a giant jump up and out of that structure, which did in fact was the evidence, was the proof that what preceded it in that narrowing band structure was absorption. You don't have that kind of a move without having absorption take place beforehand. So very good case study.
Lots of history in this chart. We see that prior support is now acting as resistance. Prior support here may in fact have been the jump across the creek represented by the old resistance and support combination there. Jump up again, the climactic event there initiating the horizontal movement. Very interesting, very Wyckofian. And the bands, I think, are very helpful to analyze that price movement. Should we look at another one, Professor?
Yes, let's do it.
So here is healthcare providers. This has been an area of interest to me. It was featured as an industry group in this week's Wyckoff market report, and there was subtle signs of strength in that area that I wanted to feature for the folks who subscribe to that report. We have somewhat of a complex structure here, but notice how we had a climactic bar jumping up and through the upper Bollinger Band after a band constriction, and now we're digesting that move within the context of the horizontal movement. Found a bit of a lower low recently at the 54.46 area, not technically a lower low, but that structure went a little bit deeper than I think a lot of folks might have expected. Your thoughts, Professor?
Well, this is a great example of action test. So the June decline mid-June was very deep into the mid-June low, and that took out the bottom of the Bollinger Band, which was an oversold condition in and of itself. It had a rally, minor rally, and then a test. And notice the July test, first week up, did not go below the June low, and it basically stopped there, had another slight test a week later, and then had a more important rally. And so this is the way I like to use Bollinger Bands, is I look for a break of the bottom of the area. You can also see up here in March, attempts to break above the top in an overbought condition of the Bollinger, and then a test that comes in April, and that precedes the big drop. So that's another way to use the Bollingers at peaks. Action test here in June, July. So now we have another action in early September. We look for a test, could be a test to a higher low, that would be successful, and then a turn upward would be a good sign for a more important rally. And so yet to be seen whether that can happen or not. But that would be the way I'd use a Bollinger in these circumstances.
Let's see if we can lay some Wyckofian lines over that. We certainly have long-term support there now acting as resistance. A channel oversold condition, which was a break of the lower Bollinger Band jump up and out, initiating a small distributional structure, and our reaction area concluded here, now potentially support, and we moved up, strong move off that lower band tag, and of course everything has run into a little bit of CPI roadblock today, but very, very interesting there with the upsloping OBV stabilizing relative strength and the positive signal line cross on the MACD. Lot of things going on in this chart.
John, I think that's about all the time we have for today. And
Fantastic.
a great scan, very straightforward. Everybody go put that scan in your scan engine and do some work with it and see what you think. And with that, John, thank you for being here.
Great to be here.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.